Okay, let's talk about a day, January 19th, 2026, when the entire global financial system got completely rocked by one single and honestly pretty audacious demand from the White House. It was a wild move that basically turned trade into a weapon and sent markets everywhere into a total tailspin.
So, what was it all about? The US administration decided to bring back a really old, really ambitious idea to just straight up buy Greenland from Denmark. But, Denmark said no. And when that offer was flatly refused, things escalated fast. And this wasn't just some empty threat. This was serious economic pressure. The US threatened to slap tariffs on some of its closest allies. We're talking Germany, France, the UK. They were effectively holding their economies hostage over a piece of land. So, how did the markets react? Well, pretty much exactly how you'd expect. It was immediate and it was brutal. The mere idea of a new, completely unpredictable trade war sent investors running for the hills, and the fallout went global.
The impact was instant. You can see the major European markets, which were right in the firing line, just tumbled by over 1%. And get this, before the US markets even rang the opening bell, the futures were already deep in the red. It's just a crystal clear sign of how nervous and interconnected the whole financial system really is.
And those shockwaves, they didn't just stop in Europe. No way. They traveled all the way to India. The Sensex and Nifty both saw major sell-offs, and a whopping 2.42 lakh crore in shareholder wealth was just gone, wiped out in a single day. But here's where things get really interesting. In the middle of all this chaos, as investors were fleeing from stocks, they didn't just tuck their money under a mattress. They poured it into one specific asset, and it created an absolutely historic surge. 305,000 rupees. Just let that sink in for a second. That was the price for a single kilogram of silver on the Mumbai spot market. That's the market for getting your silver right here, right now. It was an unbelievable price, an all-time high, driven by this desperate global hunt for a safe place to park cash. So why the massive price spike? Well, it wasn't just one thing. It was a perfect storm. First, you had the geopolitical panic driving everyone to safety. Second, there was already a major supply crunch, with inventories super low. And third, you have the skyrocketing industrial demand for silver from the tech and green energy sectors. All three of those forces just slammed together at the exact same moment. And to put this into perspective, just look at the difference here. Gold, the traditional safe haven asset, it did rise. Of course it did. But its gains were absolutely dwarfed by silver's incredible 4.71% surge. This wasn't a ripple. This was a silver tidal wave. But for the Indian markets, the story was even more complex. See, they weren't just fighting off these global fears. They were already dealing with some pretty big problems right at home. So, here's the crucial point. This global shock couldn't have hit at a worse time. The market was already feeling weak and vulnerable because of a string of really disappointing earnings reports from some of its biggest, most important companies. You can see the report cards here were mixed, but mostly worrying. Reliance Industries came in basically flat. ICICI Bank actually posted a surprise decline, and when market heavyweights like these start to stumble, their weakness just drags everything down, making a bad day from abroad feel a whole lot worse. Okay, but while all this daily chaos was happening in the markets, if you sort of zoomed out and looked at the bigger picture, you could see these fascinating long-term strategic moves playing out. It really showed a world pulling in completely different directions. I mean, the contrast here is just night and day, isn't it? On the very same day, the US was threatening to use tariffs as a weapon. India was busy finalizing a huge free trade deal to get rid of tariffs with New Zealand. It's two completely opposite views of how the global economy should work, playing out in real time. And that trade deal wasn't a one-off. You could see India making several really big moves, all aimed at building long-term strength. Consolidating key industries at home, exploring digital currencies to be less dependent on the dollar, and going to Davos to pitch itself as a stable anchor in a really volatile world. All of these moves, they all point to one core idea: strategic autonomy. It sounds a little academic, I know, but what it really means is the ability to run your own race without being thrown off course by others. In a world where a single tweet can rattle global markets, that kind of independence isn't just a nice-to-have, it's becoming an absolute economic necessity. And that leaves us with a pretty big question to think about. We saw investors rush into silver, calling it a safe haven. But maybe, in the long run, The ultimate safe haven isn't a medal you can hold in your hand. Maybe it's a national strategy built on resilience, diversification, and independence. If you found this breakdown valuable, then help us figure out what to tackle next. We really want to create more explainers on the topics you care about.
Liking this explainer, sharing it with your friends, and subscribing to the channel makes a huge difference. And please, drop a comment below and let us know what complex story you want us to break down next. Thanks so much for watching.